Hi everyone, I hope you're all doing well, and today we're going to be talking about Cineworld and kind of giving an update about Cineworld now the price on Cineworld has dropped even more when you just didn't think it was possible. So we'll be covering a few new things that are going on with Cineworld. As always guys, you can smash that like button, that'd be absolutely amazing. I know I said I'd make a Neo video, I will just delay that one day because I wanted to do this video and then I'll do the Neo video that I said I would do it. So I will get that done for you guys. And as always, if you want to know what stocks I'm buying, when I'm buying them, then there is a link in the description that takes you to the Patreons page. On there you can see what stocks I'm buying and selling. As well as that, there's a link to a Discord group where there's a lot of really good investors that are always talking to each other, sharing information on stocks. So I thought I'd put that there for you guys. But yeah, we're going to get stuck into Cineworld and the fact that it's dropped even more just when you don't think it's possible. So we'll take a look. Now I have got a few more videos out about Cineworld, so if you want a bit more like in detailed information about Cineworld, go check them ones out. But this is kind of more talking about some, up-to-date news. I will be putting a few things in here that are from past videos just to kind of help explain what's going on. But yeah, a lot of it will be more newer information. So if you want some older information like the fundamentals of the company, go check some previous videos out. But yeah, at the moment this stock is currently priced at the lowest it has ever been. It's pre-2007, so you're talking about 13 years of stock gains that have been totally wiped off this company. And you can see how low it is. It was trading at £3. Obviously now it's going below 40p. It has the potential to even go even lower. It could go to COVID levels. So there's potential for it to even go lower than this. But yeah, you look at how much that stock sold off. You look at it's a PE ratio of 3, and obviously that's pre-COVID PE ratios we're talking about. It's pretty ugly on the stock chart, and it's massively sold off. And when you look at these sort of prices, you can probably tell that you're talking about a company that is in a major bad way, or is more than likely going to be going bankrupt. So you can see, so many years of gains have just totally been wiped out. So many investors have been wiped out. So we'll take a look into the company. So obviously this is one of the companies that was closed for COVID, and it hasn't been making revenue. So that's where the big problem has come from, a company with zero revenue. But pre-COVID, when we actually dig into the company, it was a company actually growing, like earnings steady, profitability. It was growing its revenue steadily. So it wasn't a bad company going into COVID. We talk about an okay company. It's nothing crazy, like we're not seeing massive growth, but it was a steady company with steady revenue. It did pay a little bit of a dividend. So it was not a bad company. So for it to completely, sell off like this is kind of, like why is that? And the reason why is when we dig into the balance sheet, people had a lot of fear looking at that balance sheet. It was known Cineworld was a horrible balance sheet going into COVID. So obviously to deal with a company that had to shut down completely and a horrible balance sheet, obviously people straight away, alarm bells are ringing and thinking about bankruptcy, how much cash they're going to have to raise. And with 3.6 billion in debt and only 140 million in cash, that debt was way outweighing the cash. And yeah, the company should have managed it better. There should have been a lot more cash on the balance sheet to deal with some sort of situation like this. And hopefully, if the company is to make it through there, they will learn from that. Now, at the moment, Cineworld is starting to reopen in the UK. It also has a lot of US chains, which is starting to open next month. So we're kind of past the worst nearly now for Cineworld. Obviously, it's going to take a while for this sector to recover, but we're kind of slowly getting there. But it is going to be a while for it to get everything back to where it was at. Now, the Cineplex deal fell through, which did cause a few problems. So they have been buying a lot of cinemas recently. Cineplex was the one to be added into Cineworld, and that's fallen through. Now, if we're being honest, this is just down to Cineworld and thinking, oh my goodness, like we've got no money. We're buying a company. We're buying another company that will bring us no revenue in, that will cause us to have to lend more money. We're going to have to knock this deal on the head. And obviously, Cineworld have cancelled that. And obviously Cineplex have looked around now and gone, hold on, you were supposed to be buying us, this is unlawful. And it probably was unlawful. Like, the Cineworld will probably get done for this deal not going through. So that's another problem that they've got going on right now. And I'm kind of hoping that maybe Cineworld likely get away with this, to be honest with you. But it was something that had to be done to try and save the company. Also, another negative is the movie delays. So we've got movies that are being delayed until 2021, so there's kind of not that many big releases, so it's going to definitely be a rough year There's also the potential that now that movies are actually going to come on like streaming platforms a lot quicker than previously. Obviously, that's not going to help cinemas with like the hype of a movie coming out, because people are just going to go, oh, I'll only have to wait a few weeks now until to watch it on Netflix. So that's the negative for the company as well. But I still don't think you'll be able to, beat that cinema experience that you do have. And at the moment, it's currently believed to be burning through about 35 million a month in cash, which is obviously a lot. When you look at that balance sheet, obviously it will have burnt through a lot of that cash already, so it probably won't have that much left. And obviously, if it opens up, hopefully it can get that how much it's burning through a month down a little bit, but still it's a lot. Now, it has been able to get 89 million from lenders, about 45 million from the coronavirus scheme, and it's also going to be looking at 20 million from the US, like kind of similar coronavirus scheme. So it gives it about 157 million cash boost on the balance sheet. Obviously, there's some debt on there now. I think the debt's actually gone over 4 billion. But the positive thing is that it does have a lot more cash, 154 million in cash to get it through. And I think Cineworld will not have trouble raising more cash if they need to raise more cash, because of who they are, and they'll probably be in a better position when they do need to raise more cash. So I don't see this company really going bankrupt, because I think they'll always be able to raise a lot of cash. But judging on that, if they're burning through about 35 million cash, 154 million, we're probably looking at somewhere around about January 2021, and this company will more than likely run out of cash then. So we do need to see the company actually pick up before January 2021, and that's going to be the key thing. So it's got about another 5 months of life now, and we'll see where it goes from there. Like I say, I think it will be alright, and obviously I think it will get that cash it's burning through down a little bit with more and more movies, especially if you can do that like Christmas period. So there's some positives on the cash front. Obviously it's still not out of the woods yet, but it's giving itself a couple more months life yet, which is positive. So I still think there's a lot of risk, because I think there's a potential it still needs to raise a lot of cash. I'd say there's about a 25% chance of it going bankrupt. And overall, where do I see the company going? So probably I think that until the new releases come, that's always going to be the problem. That's what's really going to help the company out when the new James Bond comes out and everything. If this company can get to a point where it does post half the revenue that it does do, it posts half the revenue it will post in, the company will actually do really well, and I think the share price will reflect that, because there will kind of be them fears of, oh, it's back in profitability, it's making revenue, and I think it is still probably about a year and a half off that, but I think it will make it through. Like I say, I still think there's a lot of risk, 25% risk there that it goes bankrupt, which is a lot. You don't really invest in companies like that. But when you look at the share price now and you go, it's 40p, I'm thinking that if it does get to that point, the share price is easily going to 2x. So you're probably going to make a lot of money. There's potential that it even goes up more than 3 or 4x in the long term if it does get to that point. So I think it's still going to make it through this. I think will get to a point where it's doing half the revenue, half the profit of what it used to be. And if that happens, I think the share price will 2x off this. And that's kind of my risk to reward here. Now, I'm going to say there is a lot of risk, and if you're a new investor, I definitely won't buy this one. I would say that if you don't like a lot of red days, or you don't like being down on your positions a lot, and you don't like high risk stocks, this is definitely one for you to avoid on this one. But for me, I think it's one of those that I just put a little bit of money in, money that I don't mind losing on this company, and then see where it goes, because if it does go right, there will be big rewards with this one. But like I say, I wouldn't rate the company as a buy just because how awful the balance sheet is. But there's that kind of potential of, I think the company will get through this, and there will be big rewards on the other side for this company, and there is potential for it to go down from here to COVID lows. So I am going to leave myself a little bit of room to just average in a little bit, but I won't be putting huge money in. Like I say, it's money that I am willing to lose in this company. So yeah, I still just want to nibble a little bit at Cineworld, but like I say, I still don't recommend it as a buy just because of how much risk there is there, and the bankruptcy risk. So definitely one to just be careful of, and like I say, for quite a few people, especially, I think I've got quite a few new investors recently as well. This one's probably one not for you to go into, in my opinion. But I thought I'd update you with Cineworld today, guys. I hope you enjoyed the video. As always, if you can subscribe, that'd be absolutely amazing. Like the video if you haven't, and I'll see you in the next one.